December 26th, 2020. While the world focused on vaccine rollouts and lockdown restrictions, a British think tank published a forecast that barely made headlines. The Center for Economics and Business Research declared that China would overtake the United States as the world's largest economy by 2028, 5 years earlier than their previous prediction. The report landed with the weight of statistical certainty, backed by data showing China's economy at $14.7 trillion racing to catch America's $20.9 trillion. Few paid attention because most assumed this moment was inevitable, a mere formality in the grand arc of history. But here's what almost no one understood. Economic supremacy doesn't transfer through ceremonies or treaties. It arrives through a quiet, irreversible crossing, a moment when one nation's productive capacity simply exceeds another's. And when that threshold is breached, everything that seemed permanent about the global order begins to dissolve. The currency that dominated for generations starts to weaken. The institutions built by the previous leader lose their gravitational pull. The rules that governed international commerce get rewritten by different hands. The 2028 projection wasn't just a number on a spreadsheet. It was a countdown to the end of an era that began in the 1890s, when America itself crossed that same threshold and displaced the British Empire. Economic transitions follow a pattern so consistent it might as well be a law of nature. First comes industrial dominance. One nation's factories outproduce all rivals. Coal and steel production surge past competitors. Manufacturing output doubles, then triples. The world begins sourcing its goods from the rising powers' ports and factories. This phase creates wealth at a scale that reshapes everything. Then comes financial supremacy. The rising nation's currency becomes the preferred medium for international trade. Foreign governments hold reserves in that currency because everyone else accepts it. Banks in the ascending nation set interest rates that ripple across continents. Capital flows toward their markets because that's where returns are highest and stability seems guaranteed. This is when economic leadership becomes monetary hegemony. Finally, there's the reserve currency moment. This is the ultimate prize, the marker of absolute dominance. When a nation's currency becomes the global reserve, every transaction on Earth reinforces its power. Oil gets priced in it, debts get denominated in it, central banks stockpile it. The reserve currency holder can print money to solve domestic problems without facing the inflation other countries would endure because global demand for that currency absorbs the excess. It's an exorbitant privilege, a term coined by French officials who watched America wield this power for decades. The United States understood this sequence intimately because it lived through it once before, not as the displaced power, but as the ascending one. In the late 1800s, America was where China is now. By 1890, American industrial production had surpassed Britain's. Coal output rose 800% between 1865 and 1898. Steel production exploded. Railway mileage increased by 567%. By the turn of the century, American factories produced twice as much as British ones. The economic overtaking was complete by the early 1890s, though the dollar wouldn't claim reserve currency status until decades later, after 2 world wars had shattered European power beyond repair. The British Empire in 1870 controlled roughly 1/4 of global GDP. London was the undisputed financial capital of the world. The pound sterling was the currency of international trade. British coal mines and steel mills powered the Industrial Revolution. British ships carried goods across oceans. British banks financed ventures from Argentina to India. The sun never set on territories flying the Union Jack. This wasn't propaganda, it was a measurable fact. But underneath that dominance, structural shifts were accelerating. The United States emerged from the Civil War in 1865 with a unified national market and rapidly expanding infrastructure. The Transcontinental Railroad connected Atlantic to Pacific. Massive iron ore deposits in Minnesota met Appalachian coal and Pennsylvania steel mills. Immigrant labor flooded cities. Corporations grew to unprecedented scales. American productivity began eclipsing British output in sector after sector. By the 1880s, the writing was on every statistical table. American coal production surpassed British production. American steel mills outproduced British counterparts. American industrial patents multiplied. The watershed moment came in the early 1890s when American GDP overtook the British Empire's total economic output. Oxford economics data confirms that America's economy outstripped Britain's former colonial power during this period. By 1916, the British economy was definitively smaller than America's, and the gap would never close. Yet the pound sterling remained the world's reserve currency for decades after Britain lost economic supremacy. Why? Because reserve currency status is the last domino to fall. It requires not just economic superiority, but also financial infrastructure, military power, political stability, and, crucially, a crisis that forces the old order to collapse. For Britain, that crisis was World War II. The Bretton Woods Conference in July 1944 formalized what had already become reality. Delegates from 44 nations gathered in New Hampshire to design the post-war monetary system. They agreed to peg currencies to the US dollar at fixed exchange rates, with the dollar itself convertible to gold at $35 per ounce. The International Monetary Fund was created to maintain this system. The dollar became the world's reserve currency, not through market evolution, but through deliberate institutional architecture built on America's unmatched economic power. Britain's pound, weakened by war debt and diminished production, was retired from global reserve status, a process that dragged into the late 1970s. The lesson is stark. Economic leadership precedes monetary dominance by decades. Industrial supremacy arrives first. Financial power follows. Reserve currency status comes last, often requiring a catalyst, usually war or crisis, to complete the transition. The gap between America surpassing Britain economically in the 1890s and the dollar becoming the reserve currency in 1944 was 50 years, half a century of lag time between economic supremacy and monetary supremacy. China in 2025 stands at $19.4 trillion in GDP, according to the International Monetary Fund. The United States measures $30.6 trillion. That's a gap of $11.2 trillion, or roughly 63% of America's economy. China would need to add more than half of current U.S. GDP just to pull even. By nominal GDP measures, the dollar value of goods and services produced, America still leads by a significant margin. But this headline figure obscures more complex reality. In 2016, China's economy surpassed the United States when measured by purchasing power parity, a metric that adjusts for what money actually buys domestically. The IMF and World Bank both confirmed this crossover. By PPP measures, China's economy reached $37 trillion compared to America's $30 trillion in 2025. This means Chinese workers and businesses produce more actual goods and services than Americans do, even if the dollar value appears lower when converted at exchange rates. Here's where the pattern diverges from expectations. The 2028 projection was made in December 2020 when China's economy was growing at 5 to 6% annually, and America was struggling with pandemic disruptions. The Center for Economics and Business Research forecast assumed China would maintain 5.7% average growth from 2021 to 2025, then slow to 4.5% from 2026 to 2030. That growth trajectory would push China past the United States in nominal GDP terms by 2028. Instead, reality intervened with force. China's property sector, which accounted for approximately 30% of GDP, entered a severe downturn beginning in 2021. Real estate developers collapsed under debt burdens exceeding 60 trillion yuan, roughly $8.2 trillion in hidden liabilities, according to Goldman Sachs estimates. The property crisis triggered a wealth effect that depressed consumer spending. Youth unemployment, excluding students, hit 18.9% in August 2025, the highest level since new measurement methods began in 2023. Total non-financial debt in China exceeded 300% of GDP, a level rarely seen outside of crisis conditions. Demographics added another layer of constraint. China's working-age population peaked and began declining. The one-child policy's legacy manifested as a rapidly aging society, with fewer workers supporting more retirees. Birth rates plummeted. Migration to cities slowed. The demographic dividend that powered decades of growth reversed into a demographic drag. Meanwhile, the United States economy displayed unexpected resilience. GDP grew 2.8% in 2024, surpassing expectations. The economy maintained momentum into 2025, with strong labor markets and technological innovation driving productivity. By 2024, the U.S. GDP reached $29.2 trillion, and by 2025, it crossed $30.6 trillion. The gap between the two economies, instead of narrowing, began widening again in dollar terms. The result? Revised forecasts. In July 2023, the Center for Economics and Business Research pushed their projection to 2036, 8 years later than originally predicted. Some analysts now suggest China may never overtake the United States in nominal GDP terms. Or if it does, the gap will be so narrow and the timing so uncertain that the symbolic moment loses significance. But here's the contrarian reality most analysis misses. China already overtook the United States in the measure that matters most for long-term power: purchasing power parity. When historians look back, they may mark 2016 as the actual transition year, not some future date when exchange rate conversions align. PPP measures real productive capacity, the ability to build infrastructure, manufacture goods, and deploy resources. It strips away currency fluctuations and financial accounting to reveal which economy can do more actual work. China, in 2025, produced more steel than the rest of the world combined. It manufactured more cars, more ships, more electronics. Its factories output more physical goods than any nation in history. This is the same industrial dominance America held in 1890 when it surpassed Britain, decades before the dollar became the reserve currency. The 2028 projection, whether it materializes or gets pushed to the 2030s, asks the wrong question. The focus on when China's nominal GDP overtakes America's misses the deeper transformation already underway. Economic transitions don't happen in single moments. They unfold across decades through stages that compound into irreversible shifts. Reserve currency status remains America's last and most powerful advantage. Approximately 60% of global foreign exchange reserves are held in US dollars. International trade gets invoiced in dollars. Commodities like oil are priced in dollars. This creates persistent demand for dollars that allows the United States to run trade deficits without suffering currency collapse, the exorbitant privilege. But reserve currency status proved surprisingly sticky for Britain even after it lost economic supremacy. The pound sterling maintained significant reserve status into the 1970s, 3 decades after Bretton Woods formally crowned the dollar. The transition took so long because of institutional inertia, existing debt denominated in pounds, and political relationships that sustained the pound's role. Yet ultimately, economic gravity prevailed. The reserve currency followed the reserve economy. History suggests America's monetary dominance will outlast its economic supremacy, just as Britain's did. The dollar will likely remain the primary reserve currency for another decade or two after China achieves clear economic leadership. Financial infrastructure, legal systems, capital market depth, and military power all reinforce currency status beyond pure economics. But the erosion will accelerate in ways that creep into daily life. Central banks will diversify reserves more aggressively. China will push its currency, the yuan, for bilateral trade agreements. Belt and Road Initiative countries will settle transactions in yuan to access Chinese financing. Each small shift will reduce the dollar's share of global transactions. When reserve currency status finally changes hands, if it does, the implications will cascade through every layer of American society. The ability to finance deficits cheaply will evaporate. Interest rates will rise. Government spending will face harder constraints. Inflation will bite deeper. Living standards will adjust downward as the exorbitant privilege fades. These aren't abstract macroeconomic concepts. They translate to more expensive imports, higher mortgage rates, reduced government services, and pressure on wages. The military implications deserve equal weight. Every global hegemon in history backed its economic power with military reach. Britain's Royal Navy enforced Pax Britannica. America's carrier groups and overseas bases underwrite Pax Americana. When economic resources decline relative to rivals, military capacity eventually follows. China's defense budget already exceeds $230 billion annually and grows faster than America's. The shipyards that once built British dreadnoughts now sit quiet. The factories that produced American tanks in World War II have long since closed. China's shipyards now launch warships at a pace America can't match. This isn't inevitable decline, it's relative repositioning. The United States economy will keep growing in absolute terms. Americans will remain wealthy by global standards. But the gap between America and its closest rival will narrow and eventually reverse in ways that reshape global power structures that have held for over a century. The 2028 projection was never really about 2028. It was about a pattern that's been running since the 1880s, reaching its logical endpoint. When the Center for Economics and Business Research published that forecast in December 2020, they were measuring the final stages of a transition that began decades earlier. China's economy started opening to markets in 1978 under Deng Xiaoping. GDP was $150 billion. By 2000, it reached $1.2 trillion. By 2010, it hit $6 trillion and surpassed Japan to become the world's second largest economy. By 2016, it exceeded the United States in purchasing power parity terms. By 2025, it stands at $19.4 trillion nominal, $37 trillion PPP. This isn't a projection. This is a documented climb. The property crisis, demographic decline, and debt burdens that emerged after 2020 may delay the symbolic moment when China's nominal GDP overtakes America's. Those headlines might never arrive, or they might come so quietly that no one notices. But the deeper transition is already complete. The world's factory floor has moved. The center of industrial production has shifted. The nation capable of mobilizing the most resources, building the most infrastructure, and producing the most goods has changed. What happened between Britain and America in the 1890s is happening between America and China right now. The only question is how long the reserve currency lag will last this time, and whether America can maintain monetary supremacy without economic supremacy longer than Britain did. The real warning isn't about 2028, it's about the 50 years that followed 1890. Britain remained a global power through 2 world wars, but its relative position never recovered. America rose through the 20th century not because Britain made catastrophic errors, but because economic gravity pulled power toward the nation with superior productive capacity. That gravity doesn't reverse, it only accelerates. China faces its own structural obstacles.